All right. Hey there. Good morning. That get it? There we go. You know, sometimes it just it doesn't pay to get out of bed. Wow. So that was a lot of me just talking there. Y'all laughing at me, huh? Oh man, you know I think I'm gonna have to get a new port for my microphone here. We keep having this issue here lately. My apologies. Man, oh man, that's all right. I'm gonna talk about everything I just said there as we go on here. Really, it's better than this. It really is. You can join us at TexasWestCapital.com. Click on that green button. It'll take you to the other site, howtotradetowin.com, and you can get signed up with us. We'd love to have you there. Tier 3 is everything, all that educational stuff, well over 200 hours of educational content. So we'll try this again. Hello there, Ernest, Nevlusian, Brian Riley. Inevitability. It was inevitable that it would seem muted, right? It's not that it was muted. It's just that the connection, for whatever reason, is loose or not working so well lately. So again, probably have to get me a new connector there for it. What a day. Let's see here. Let's see. Is that Pulford there? Good to see you. Gosh, man, you know what? My eyes, man. I'm getting old here. Frank's here. Andrew's here. Keith's here. Let me see here. Is that Ikanui? I hope I said that right. As always, guys, if I mispronounce your name, please understand it is no disrespect intended at all. I'm very sensitive to hopefully saying people's names as correct as possible. So if you want to ever spell it phonetically on there, and I see that, I'll be sure to remember it better if I screw it up. Trip Pop, what's going on? Let me see here. I'm reading through you guys' comments as I'm saying hello here. Jeremy's here. Blaze is here. Devin's here. And I'm sitting there talking to you guys. And so, you guys know I've got this big screen, right? So I've got this 49-inch, flat or curved monitor, right? And so it's basically 3 sections to this monitor. So I have my software, my video software over here. I have my charts and whatnot right here in front of you in the camera and all that. And then over here I have the output, what you guys see from the video there, as well as the chat. Because I sure as heck can't read the chat on my software screen over on that side over there. It's way too small. So yeah, that's why I may sit there and keep going, and I don't see it. I'm trying to talk to y'all, and yeah, it's over. Let me pull this a little bit closer to me. Maybe that'll be better there. Hey there, Data. Andrew is here. Chad is here. Dominic, what's up, man? Let me see. What do you guys got here? Yeah, let's see. I got driving you guys crazy there. I can imagine you sit on the other side just yelling at the top of your lungs trying to get my attention. I do apologize. Maddie, what's going on there? Chad Johnson is here. You said you just joined Tier 3 Saturday and joining it. Man, would love to have you there, man. As a matter of fact, I think I remember your name showing up. So glad to have you there. By the way, guys, not everybody talks, and that's okay. We've got a great core group of traders who discuss and post their ideas and whatnot all day long, basically, and in a lot of the channels. You guys will see that. I encourage you to talk. I encourage you to ask questions. Because, again, a lot of the members that we have been there since day one with me. And so they've been through all this education, everything as well. And they're really great traders. And they've got a lot of fantastic ideas. And so, they'll often may even answer your question before I do. A lot of real helpfulness there. Bitcoin Anarchist, what's up? Checking in from Australia, my friend, right? Silvio is here as well. All right, guys. So, hey, listen, I just want to start off here real quick. North Korea hackers, man. You guys remember that little, $600 million crypto thing that happened not too long ago? The Axio network there. I think it was Axio, right? Axie. Can't say it there. The Infinity game? Yeah. So apparently it was North Korea. Now, if you guys have been following me for probably a year and a half or more, you'll remember I made a big deal about, with crypto, the idea that North Korea would attempt to use it. They would continue to up their, because we already know they were doing their cyber attacks and whatnot, right? And I said that, crypto would be the place for them to kind of really kind of hunker in and do some damage, as well as trying to circumvent sanctions, economic sanctions, if at all possible, with the crypto, right? But so here we go. Apparently they're the ones that did the $620 million crypto heist there. FBI says it, so they've put that wallet address on the list. But yeah, so the Lazarus Group in APT 38. So, if you keep up with that kind of thing, and I really don't see a reason why you shouldn't these days, cyber attacks are such a real thing now. But yeah, so there it goes. In case you were wondering who did it and why and how and all that fun stuff, it was your friends over there in North Korea. Our friends, right? Now, anyway. So that's what happened there, guys. It is what it is, right? What are we going to do? Let me see here. Data says, nice to see them actually having electricity after all. Hey there, Esteban. Good to see you, man. So, So, that's what we got kind of going on there. So, here's Bitcoin, guys. By the way, today is Good Friday. We've got Easter weekend. Happy Easter to everybody. Whether you celebrate it or not, happy Easter anyway. So long weekend here in the U.S. Legacy markets are closed today because of that. Again, U.S. taxes due Monday, since there's a holiday today. That gives us to that next business day, so Monday be it. So while the stock market's closed here, the CME, CBOE, those kind of things. So, your gold futures, your silver futures, those are all closed for the day. But Bitcoin continues on, right? Because it's not just a U.S.-centric exchange here and whatnot. So with Bitcoin, we're kind of looking at two different counts here, right? And so prior to this morning for the update that I do for Discord, this had not happened here yet. We were here and we were dropping here to the swing low. And I said, okay, well, what we're looking at is we've been looking at the idea that we've still got this black count here. So we've still got a wave 5 potentially to go, right? There's the off chance that wave 5 might have ended over here as like a very slight, what do you call it? Boy, words escape me today. But anyway, where it doesn't quite go down below wave 3, it stops just short of it. I'll think of the word here in a minute. And then we might have this alternate red count, which would give us a 1 and a 2 down here, okay? So basically the idea is we're looking for price to break on out above 41.512.43. If we can get above that, that says potentially that that wave B terminated over here. And then, we've got the first wave heading up here, right here, 1, 2, and then we're heading up. So that would give us a minimum expected wave 3 target up here at 43.363 and 50 cents, which is right around that wave 4. The other thought is we break down below the swing low here, which adds a lot of confidence to the idea that the black count is actually the operative one, not the red count, right? And in that case, then we look for wave 5 to target this daily S1 pivot at 39.047 and 35 cents. I mean, that's kind of what we're looking at right now, guys. Now, ultimately, what we're trying to get is a breakout above wave circle 4 up here at 43.443 and 32 cents. If we can do that, that's the first real clue that the bottom's done. So whether it goes from here and continues and breaks out, or it dips down here and then breaks out, in either case, getting above that level is your first real clue that says, you know what? We're probably headed up now. Okay? So, yeah, truncated fifth. Truncated fifth. Yes, that's the word. And I'm not a big fan of it. You guys have seen me call it once on here now. Potentially a second one there. Again, my thought about truncated fifths are they're rare. And so when they happen, they're always suspect until proven that they are what they are. So what that means is we don't immediately assume truncated fifth here and we're just headed up. We say, okay, potentially, so we need to find our breakouts, above those levels. But until it does that, still looking at the possibility it could head down lower to finish off, what the other account was over there, right? So this is kind of where we're at. Now, why do I have these yellow circles down here on the volume? Anybody know? Anybody know? Of course you know. Because what's interesting to me is through this range here, the volume spikes are at the lows. You see that? So you get to the highs up here, volume's very low comparatively. But you get up down here to these lows, right? Right in this area here, volume picks up again. Comes over here, boom, goes right here, and then rallies up. It's picked up again. Now, at the beginning of a range, you're always going to have, or just about always, you're going to have higher volume at the top as well, because you have your first bit of demand coming at the bottom here, and you still have supply coming in, and that kind of helps create that range. So you're going to have that. But notice after that, look what happens even right here. Look at this. We can even do this, guys. We can take this right here as well. Look at that spike on that drop there, right? And so overall, these volumes toward the tops of the rallies are very low volume comparatively. Significant volume at the bottoms. And again, remember, the reason we watch the volume and the price action is because we want to see where are the big boys at? Where are they showing up? And so if you see that significant volume as the range develops continue to show up at the bottoms, that tells you that they're buying what you're selling. If it's happening at the tops, it tells you they're selling everything that you want to buy. So in this case, yes, you're going to have still little spikes at the top, but ultimately, look how large it is down here at the bottom. Look how much more significant it is down here at the lows. So whether it says, okay, bottom's in here and this red count's relevant and, is this the one that's going on and we're going to head up, or if it says we've still got the black count, again, I think the black count would just be this spring, would just be a drop below that range low, probably right below this area over here, hits that S1 pivot and rallies right back up. And then just kind of takes off. That's it, So we're going to watch and see what happens with that. But really, it's does it break down below here or does it continue to break out here, here, and here? That's what we're kind of looking at. So yeah, I'm still waiting to enter, for some confirmation on that. But within this range here, you guys will have to forgive me, man. I have allergies over here today. Don't mean to keep rubbing my nose here. But yeah, that volume down at the lows there, very significant that it continues to happen in that area as the range has developed. And then as well, you had this major volume here, and even though this is a spike, it's less volume as you get down here. And then even as you get down to this point, still less volume. And then you get over here with this low and still less volume. So less and less is being sold at the bottoms, which means less and less demand has to show up, which is why you get your volume dropping off. And it's generally what you want to see, if you're trying to do accumulation, or if you expect that accumulation may be going on. That's generally what you want to see. You want to see overall in the range your bigger volume coming at the bottom, and at the same time you want to see that volume kind of dropping off as that range continues to develop, because again, that dropping off of volume as it's getting those bottoms just means one, either there's less supply to come in, it's being all soaked up already, or it means that the sellers are becoming convinced that the market wants to go up, so they're not trying to sell as much. In either case, it's less supply coming in at those lows. Let me see here. Let me see. What else we got going on? Andrew says the 4-hour on Bitcoin. Let's put that one on here. Let's see here. He says, I had a downward channel starting around 4.5. Where's 4.5 here? Right in this area? Nope. Are you way up here? Talking about up here, right? Yeah, about that area right there. Looks like okay. They said, now showing it breaking out of the channel. Could this be valid? Yeah, I mean, if I was to draw a channel coming down from there, I would, probably go from here down here. In general, as far as channels go, I'm not a fan of the breaking out, pulling back, breaking out, pulling back, breaking out, rejected. I'm not really a fan. I'm looking for a clean break where it stays, beyond the channel. But, it is possible. Maybe we've got that going on. I think because the top is actually over in this area, I think I would be more inclined to draw the channel probably like this, off these swing lows here. And if I do that, I like the channel EQ here. I like how it works as resistance and support. Pretty significant areas here, right? And so in this case, I would look for price needing to hit that channel resistance. And then if we can get an impulsive breakout above that, I think, we look for maybe even a pattern target of, let's see here. I don't know, depending on how long it takes together, about $5,000 above the point of breakout, which takes us up to all this resistance up here, which is what you would normally expect. Remember, a well-drawn channel, if it's valid, if that is the channel, then a breakout should give you a pattern target that takes you to the cluster at the top of that channel. And so, again, you have all this sideways right here. This is the cluster right here. You have all this sideways, so you should expect to hit that because you would expect to get resistance right there. All that supply that's sitting over here, all these people that shorted here are going to look to defend that. So you shouldn't usually just rally right through it. Most of the time you should hit it, pull back, and gather some more support, and then break on out through. So, you get a 1 up there, a 2 on the pullback, and your 3 is your breakout. So, yeah, I can see something like that. Let me see here. Blaze, yes, it is. It is. 3 o'clock, man. I told you guys I would do that since we missed it on Wednesday with the internet company being out here replacing wires and stuff. So, yeah, definitely going to still do that today. So if you're tier 3, we'll have our tips, tricks, and techniques segment that we usually have on Wednesdays. We had to move. We'll have that today at 3 p.m. Otherwise, the TWC office will be closed not too long after this stream is done in observance of Good Friday and the Easter weekend. So, yeah, looking for this rally on up through here. See if we can kind of get that going. So what am I looking for right here? I think the question was, let me kind of pull back here a little bit. I'll go a 15-minute there. Sure, why not? All right. So, okay, so now that we've done this, oh, let me see here. I mean, if the red count is correct, it's possible this could be a leading diagonal as a 1, 2. And then this could be a 1, 2 here. But what I'm really looking for... So, as you can see here, we had all this resistance here at the 15-minute pivot. I want to see it break out and stay above that 15-minute pivot. Now, obviously at the end of today, that pivot's going to change to tomorrow's pivot. But... right now, this was a great move up, but then now it's kind of falling up and breaking back down. But really, what I need to see is I need to see a breakout above 41,512 and 43 cents here on Coinbase. That's it right there. If we can, from here, if we can break out above there, that's going to hint that the red count may be the operative count right now. But then what we're going to need to see is the big move above wave circle 4 up here. Up here around that 43,000 area. 43,000 some change. That's really, at that point, when you look at the larger count, this move down, this wave B and whatever, popping up through that is going to be your first real clue. Because remember, that's wave 4 of C, right? So we have an A, B, and then 1, 2, 3, 4, 5 down for C. So breaking out above wave 4 says, guess what? Wave 5 has to be done. Because wave 5, once you have that pullback up through wave 4 says wave 5 cannot subdivide any further. It can't be any larger. So your first real clue that the bottom may be in is that breakout above that wave circle 4 there on that wave C. Ultimately, you're looking for a breakout here above wave X. I said ABC, it's WXY. But above wave X up here at 47,469.40. If you get out above that, then that says, hey, guess what? Wave Y is done. So you have an A, a B, and a C, right? Or W, X, Y. You have a 3-wave correction. You break up through that second wave. That third wave can't get any larger. So that should signal that the correction's over and it's heading higher. That's generally it, guys. When you're doing Elliott wave, that's what you're looking for. Now you can zoom into smaller time frames and try to find 5-wave advances, 3-wave pullbacks, more 5-wave advances, stuff like that. But ultimately, you zoom out to a little bit larger time frame, and those are the things you're looking for, those breakouts like that, to kind of confirm or to add confidence to the idea that maybe it's done right there. Okay? So that's kind of what I'm looking for here, guys. I'm not married to it either way, but again, within this range, again, whether it breaks down for a spring and back up or it just continues up from here, I think it makes a lot of sense because, again, all that volume is found at the bottoms. There's not heavy selling going on at the top here. There's heavy buying going on at the bottom. And as retail, that's not you buying at the bottom. Retail doesn't do that. Retail isn't as concentrated as that with their buying and selling. These are your bigger players who have a lot more to buy or a lot more to sell. That's why it shows up in the volume. They do it, in those areas, in those specific areas, right? So if they're trying to buy, they're going to have to buy a whole bunch, right around those same kind of areas at the lows, right? In that range down there at the lows, right? If they're going to sell, they're going to have to sell up here in the highs. So even there's a little bit up there to kind of keep this range going so that they can buy more down at the lows as the range is developing here. Remember, we've got bullish market structure right now after April 11th low over here. High, low, higher low. And we'll see if we can get another higher high here. So, at least for the last 4 days now, we've got bullish market structure here. Now, from up here, obviously, this is bearish market structure, right? Until we're breaking out above, guess what? That wave circle 4 area, guys. If we break out above that, this market structure right here, this bearish market structure, high, low, lower high, lower low, lower high, lower low, all of a sudden, that changes. That's broken at that point because you've gotten above that last lower high. And so then that would be a big move. So again, whether you're looking at it via Elliott wave or if you're looking at it here in terms of market structure, a breakout above this 40, what is this here on Coinbase? 43,443 and 32 cents. A breakout above that says, hey, in either case, you've broken that market structure. You've rallied up higher. So again, that becomes the first major area we're looking to get through. Now, you can hint that it's done here by breaking out above this 41,512 area. But you really need to get above that circle 4 and then this wave X here to really kind of say, yeah, that bottom's probably in. We're headed up there. Okay? So that's what we're looking for there. Now, again, guys, GBTC here, Grayscale Bitcoin Trust, right? We can see here that it looks like either a 1, 2, 3, 4, or maybe a 1, 2, 1, 2 coming through here. Nonetheless, you can see that it just pulled back to the support of this ascending channel here. And we rallied up here on the 13th, 2 days ago, really well. Hit the, what's it called here? The pivot, the daily pivot. Pulled back a little bit because that's usually what we expect, right? So now we want to see next week when the market opens, when the stock market opens, we want to see if we can get this to rally on up and through here. If we can break out above this wave circle B here at $32.59, $32.59, that should say we're headed up. If the count is correct here, 1, 2, and then, maybe like a leading diagonal going off here for wave 1 of 3, then we're looking for a target up there. And it just so happens to be at the EQ of the large range here at 37.40. So we'll look for that. But, again, remember, this is not going to go up without Bitcoin going up as well. So if this is looking like it's rallying up, we should expect Bitcoin as well to follow with it, even though this is, again, you're buying issues of the trust rather than Bitcoin itself. But the trust itself holds Bitcoin, right? So you're buying, your cost for the trust issues that it, or shares that it issues there, is the cost of Bitcoin plus any kind of premium that you have to pay with it. But yeah, I mean, so if we look at this range here as being complete with a spring, right here, retest, a lot of retest here, and then break out higher. I mean, there's a lot in there to say, hey, you know what? It looks like it's probably done. And if this is done, then there's no way Bitcoin itself is going to drop on down to a new low, or at least it shouldn't. These should move in, generally in tandem, right? For the most part. But this is a bit different market structure here than what you have with Bitcoin, of course. Bitcoin doing the triangle thing, right? So Bitcoin looking like this. A lot of stuff on here. Don't let it blow your mind, okay? Don't let it frustrate you. We have the Elliott wave count there in the black. We have the Wyckoff labeling here in the red. We have the triangle showing here as well. And so, looking at this, I mean, here's what we've done, guys. Basically, Bitcoin is pulled back to the EQ of the large range, right there at the S1 pivot on the daily, and bounced right there on that high volume node. It would be what we would expect, right? And so if this count is correct, we've got C of Y of D to go, so you're going to get an A, B, C up, probably to the top of the range. We'll pull back in 3 for wave E, and then we'll be done. And I think it's that move after the triangle's complete and we break out. That move there is going to be your jack, your jump across the creek. This red kind of zone here being that supply. And so you jump across the creek, you pull, you get near that all-time high there, you pull back to that supply, which has become demand now, right? It flips when you break through it convincingly. High volume node there, you get your back up the edge of the creek, and then you get your runoff there for your show of strength, right? You like that, Ikanui? God, I feel like I'm really screwing that up. I hope I'm not. Yeah, but I mean, right now, guys, this seems to be what I think we may be going through here at the moment. You can also notice that on this rally from the swing low over here at the end of January up here to the end of March, we've got this this volume profile here off that rally up, and the point of control, the area at which most of the volume happened, most of the transactions happened, were right here at that S1 daily pivot, right here at the EQ of the large range, right there at the high volume node overall, which is a high volume node over this whole range here, right? And that's where we're trying to get a bounce off of here. In terms of volume, so what we can notice, two things here. I'll go ahead and get rid of this over here, okay? So you have this range here. And if you're thinking in terms of Wyckoff, it's that black range that I've got going on here, right? And so within that range, you can notice that volume has been dropping off until we got to this point here, at which point volume picked up. And generally, that's what you would expect. It isn't that volume expanded through here. Look at volume. Volume fell off the entire way down. It only showed up at the lows. So again, the idea that the big players are coming in at the lows, not just locally where we were looking at, but in the larger scheme here. Look at this. This was capitulation over here. Look at this big old huge volume spike. Back over here at 28.8. Back on getting into the last few weeks of May there of last year. And again, volume dropped off throughout it until we get to this point, at which point it then shoved up again. Volume at the top here was smaller than it pretty much was anywhere else other than here at the top here. It's at these lows here that the volume spikes. It's at the bottoms here that the volume spikes. It's on the drops that the volume picks up. That's where the heavy buying is coming in, and retail is not doing that. Retail can't do that. Retail's selling into that. So again, if we're looking for reasons why I think this range is set and things are the way they are, I mean, here we go with the volume profile analysis, right? Now, again, nothing guarantees anything. We need to see that follow through in those validation levels. That's what they're there for. But if we're trying to decipher what may be happening in this range, this is my first go-to. This is what I'm looking for. And if this is a triangle building here, A, B, C, D, E, then volume overall should continue to drop off. It should, because price is consolidating. Less volatility. Volume should drop off. Locally right here, between this higher swing low here, higher lows in price, you've got lower lows here on RSI, on your oscillator there. Hidden bullish divergence means continuation of the trend. On this chart, what's the trend? The trend is from this low here. It is up. So it would suggest right here, if we can get the break on the follow through, that it is going to be a continuation of that trend higher. Daily Stochh RSI is just now trying to break out of oversold as well there. So again, a lot kind of going on with all that, right? So, you know, again, guys, I know everybody seems to want it to go down. I don't necessarily believe that's what's going to happen. I mean, you can look here, look at the structure without anything else on it. Let's just look at the structure here. And what do you see? You see a base here, a base in that same area right here. You see a test of that base right there. Boom, a test of that little base right there. Comes back down into this base, but still finding support right here at this area of support resistance right here, coming through that. And then off here, you've got bullish market structure coming off this swing low where all that volume came in. So we'll see what happens. We'll see what goes on. If you're more interested in the bigger picture, just watch your daily here. Watch for an impulsive breakout above the daily pivot. And if you want to be just a bit more sure, let it break out above this swing high right here at 48,240. Now again, I still think that, you know, it'll go up a little bit higher. Maybe even up here to 57.7, but you know, maybe closer to 53 or 55,000. And then it'll pull back 3. But I think when it pulls back those 3 for wave E to finish the triangle, I think it's only getting here. I think it's only getting right to this area, this 45 to 48 at the most. I think that's as low as it probably goes. It finds support on this, you know, again, you've got more of a base being built here. Again, we look here, you got a base, you've got a base, you've got a base, and you've got additions onto the base here. You've got all this base building here. So if it pops up and comes back, it should come right into this base, probably around this area. Maybe right up here. But it should remain above that daily pivot. Now, it depends on how long it takes, obviously. If it, you know, takes into next month, which it probably would, to get up to D and come back for E, you know, the daily pivot's going to be changed. But I think there's a good case to be made for the fact that price would remain above that daily pivot. It wouldn't dip back below it next month as it finished off wave E. So that's kind of what I'm looking for there, guys. But, you know, again, the volume of the price action seemed to suggest overall higher up without breaking down, you know, below, what is this, 32,933 here, or especially below 28.8. I'm not saying that can't happen. You know, it's possible. But right now, there's absolutely nothing going on right now that says, hey, you should be thinking that's what's going to happen. A lot's got to happen before that even gets to that point. So as a trader, if you're trying to trade this possibility without trading the interior possibilities, you're probably going to lose money. Whether it goes down there or not, because you're not being aware of what actually has to go through, what has to happen before it can do that. So, you know, kind of getting ahead of yourself, right? Moogs, what's up, man? Ikanui, man. Yeah, I appreciate it. Again, you know, I don't do the fluff thing here. I kind of just tell you guys what I'm looking at and why. Does it mean I'm always correct? No, not at all. Not at all. But that, you know, again, that's why I keep telling you guys, you know, the most important part of what you do as a trader is your risk management. We're only human, guys. We can't possibly know every possibility that could happen. And so because of that, you know, your risk management saves you. And you should be doing that. I do not know a successful trader today, and I know a lot Very successful, much more, wealthy than I am. Trading big desks and whatnot at big companies, big banks and whatnot. And, risk management is the core of what they do. They could not be where they're at without that risk management. So, you guys need to take that seriously. Let's kind of jump over here. The dollar, man. So the DXY, here we go, right? So we hit my initial target. We actually went a little bit higher. If we'll look at it here, we hit right here. This was the initial target, was that 100.500, remember? And so we hit it right here at 100.523. Forgive me, I was off by 0.023, right? But that gives us 3, 4. There was a nice, again, when you're doing pivots and you come in sideways between your pivot and your R1, and if you rally up to the R1 and get rejected, you look for a rejection at the pivot and a breakout higher, and that's exactly what we got. Nice impulsive breakout here. Now, in doing this, there's 5 waves up here. So wave 5, this wave 5 could be done. It is possible. The minimum expected for wave 5, the minimum that you need is 5 waves up that break out just above wave 3, right? So we've got that. But I'm not convinced that's the top yet. I think we might still have further upside. And so if we do, and if this is 1, 2, then that gives us a minimum expected wave 3 up here at 102.182, which, as you can see, ends up being the 1-hour R3 pivot right at the bottom of the blue supply structure. And wave 5 then has a minimum expected target of 102.633. Now, I've had this up here forever and ever, and I've told you guys as we were coming up here that there's a good chance we would target at least the bottom of that, if not the mid-range, right? Because that's what we usually do with our supply and demand structures, right? And so this count would get us there. Now we just need to see it following through and doing it. If we get a breakdown below wave 4 over here, that's going to suggest wave 5 is done. And so in this case, wave 5 of 5, wave 5 of 5 of 5 of 3, right? So then we'd have this larger wave 4 pulling back, probably mid-90s. And then the larger wave 5, parentheses 5, heading up into probably, again, this supply structure up here. But we'll see what happens here. The big thing, if you're still bearish the dollar, a year plus, and you guys, if you're still bearish the entire time as this has risen, from down here to up here, if you're still bearish, you cannot possibly be so if we break out above. I mean, you can try to be, but it makes no sense. If we break out above this swing high up here at around 102.992. That's that swing high there. If we break that, this is done. This is done here. We're rallying back up. And, my count as I have it here, continues to be validated. The idea that wave 3 is in progress up here to about 107.61 at least. So we'll see what happens. This here's the daily. You can see that we're just kind of doing some sideways here. You got this change of character happening here. So it is possible we could see some sort of range in this area, which again would be what we would expect, right? A little bit, maybe. This could end up just being, your preliminary supply coming in as you rally up here, and then the range ends up here. As you get your buying climax around that top up there, and you pull back and you break, distribution heading down for wave 4, and then you get wave 4 coming down, and then you get wave 5 back up there. So yeah, but there we are, guys. I've received so much flack over the last year because I've been calling for that dollar bullishness. I talked about that first week of January last year being the bottom, and I gave you the reasons why. And we've continued to follow up there. Now, I haven't said it's guaranteed to go up. I've always said, listen, we've got to do this and this and this. And as we continue to do that, it just adds support to the idea that it's going to continue higher. But I've given you along the way areas that if we broke down below, it would mean that maybe it might be topping out and heading lower, right? So far it hasn't. It's continued its rally as we would expect. Or at least as I expected, right? It's made my Euro USD shorts amazingly profitable. Over the last year. It has been probably the easiest trade, guys. I mean, if you think about it, Bitcoin's been sideways, really more or less since January of last year. the DXY has rallied up. Euro has dropped, obviously, right? So, even with some of the other pairs, the yen, man, the USD yen has been a great long all year. But I think the Euro USD has been the easiest one to play. It's been short for a year now. Made a lot of money off that. And so I think we've still got some further downside. Again, it has confluence, with the dollar, the DXY continuing to rally. So, yeah. I did close out my position. If you guys are following me on Twitter, I did mention on there that I closed out my position. And so, yeah. I think I got, about 306 pips on that? Profit on that? So that turned out really well. Oh, by the way, guys, hey, real quick here. Our friends over there at Elliott Wave International, they finally got an end date on this. This is this free course that you can take with them. Remember, you don't have to have a credit card to sign up or whatever. You just go right here. They give me that shortened link because it's easier with the with Twitter's limited space there. But yeah, so that right there will take you to it. You just got to sign up to be their EWI club member or whatever, which is just creating an account. Again, no credit card needed or whatever. But this is free until, I think, Monday. Yeah, Monday, April 18th. So if you haven't gotten it, man, get in there and get it. Jeffrey Kennedy, man, one of my favorite analysts. He's a great educator. He's been around a long time. He's I believe he's a CFA, a chartered financial analyst as well, or a technician. But yeah, I mean, if you want some free education on some things, I mean, that's where to go right there. And continue to follow me, because anytime EWI has something like that, they let me know so I can let you all know. Sometimes, because I have so many of you guys showing up with them, they'll give me something that they don't give to everybody that you guys can get for free, education and whatnot, and access to content. So we do that as well. But yeah, I do like Jeffrey Kennedy, though, as far as educators go. I look up to him. He's a great guy. Thoughts on Elon's Twitter bid? Is he really serious? I don't know that he's really serious. I saw some talk about Twitter potentially doing the poison pill thing, basically making their stock kind of worthless to him so that he won't try to do it, won't try to take over. Coming up in the 70s and 80s, guys, during the 80s here in the U.S. Was a big time for corporate raiding, reverse mergers, stuff like that. Poison pills were used a lot because, the hostile takeovers. I mean, it was a time, man. It was a time to be in finance in the 80s. And so a lot of movies were made about it. You had Wall Street, Gordon Gekko, right? Greed is Good. You had, I don't know, Danny DeVito did a movie called Other People's Money, OPM. There were a couple of them out there, though, but it was a heck of a time in finance with that kind of thing going on. And so, it made its way to popular culture, again, with movies and whatnot. But that same kind of thing is what's potentially going on with Twitter here. I'm not sure that I believe Musk is really interested in taking it over. But, he's all about being seen. He's all about making the grand gestures, getting your attention, being the talk, right? The center of attention. So I don't know that he's really serious about it, but we'll see what happens with it. I mean, what Twitter is talking about doing with the poison bills is, what's expected with this, because they're not overly excited, most of them, it seems like, for Musk to be to have control over Twitter, to have own enough shares to actually be in control. So yeah, you're gonna go back and watch those movies? Oh, Blaze, man, it was a time, man. It was a time. I was getting into my teens about that time, so I remember him. I remember very well. Remember '87? We've talked about that here many times. Bloody Monday in October of '87, where you had the stock market drop. Like, seriously? That all happened during that time as well. So yeah, it was a crazy time. Petey says 2 Saudi investors said no, to the Twitter thing. Yeah, exactly. Big investors. Yeah. So, but that's the way it is. And so if the poison pill works, then Elon is not going to be really interested, even if he is now. He shouldn't be interested in buying it at that point. But I honestly, guys, I'm not really sure that he really is serious about buying it right now. So we'll see. Pump and dump? Well, that'd be something else. Now, you can't do that, obviously, with stocks, They're scrutinized a lot more than crypto. Right now, anyway. But those crypto regulations, as I talked about a few years back, coming in during this bull cycle, have been coming in. So no surprise there as well. Let me see here. Oil, guys. Oil, I've updated the count to suggest that we might have a 1-2-1-2 here. It might be done at that daily pivot right around the 65% retracement level. But even if not, 70.5 is right there at the high volume node, about 109, and 78.6 right there at the R2 pivot on the current 4-hour for this week anyway. Right there at 111. So, looking for the break back down below wave B here, support at 99.87. If we can get that, that should signal, hey, we're coming back down. That interior wave 3 has a minimum expected target of 69.40 then. Stocks, oil, stuff like that, really looking like it's setting up for a third or a third of a third. Or, one of a third coming in. But basically a wave 3 down. And so wave threes, if you guys don't know, are notoriously much more violent. They're much more significant. And so, I could see that happening. Again, you've got, you hit the level here, you bounced up, hit it again, bounced up, maybe a shorter local high there, shorter, higher high. And you come back down against this level that's holding support here, and boom, break down, it just free falls. Water falls down. So kind of looking at that potentially beginning next week, guys. Potentially beginning next week. So we'll see what happens as the market opens back there at the beginning of next week. As far as, let's see here. What's going on with these other ones? What do you call the indexes? This is the E-minis. You can notice here you've got a lot of support here, and it keeps coming back to this, looking for a breakdown below 43.84 to say, hey, we're headed down. So there's that bigger picture there coming off, of course, that all-time high up here in the beginning of January of this year. So again, the idea being there's a 1, 2, and potentially 3 in progress, right? Dow Jones, same idea, more or less. Let me see here. Again, Dow Jones not as broad, or much more broad-based, not as thickly held technology as S&P or the Nasdaq. But again, potential all-time high up here, potential top at the all-time high here in early January. Looking at it as a 1, 2, 1, 2. Again, kind of finding some support in this area here, looking for that breakdown, right? Gives us that wave 3 potentially next week. And then, of course, we've got the Nasdaq here. Nasdaq Composite is this one here. And so heavily technology, finding its top potentially there back in November. So, month and a half prior, almost 2 months prior to the other ones, which were more and more broad-based, right? Again, same thing I was talking about as we continue to go up. I said the top would likely be noted by technology, because that's what was driving it up. We had that shallowing breath, right? As it continued going higher, we had less and less stocks pulling it up, and those stocks that were pulling it up were the technology stocks: Tesla, Microsoft, Apple, Amazon, right? And so coming down here, I've got this as a 1, 2, looking for a third wave down. Locally here, again, same idea we're seeing the other ones. You've got this support, coming back down to that support, putting a lot of pressure there, looking to break down. So from the charts here, it doesn't look like next week is going to be a very good week for stocks. So we'll see how they open up next week, but could very well quite possibly be the start of that big. I mean, the start would be here, but really kind of that real getting into it, breakout through here of that wave 3 sometime next week. Let me see here. So, again, we look at silver, right? Because why not? Let's see here. We had now silver came up within a few cents of the swing high up here. So, and then it dropped down to the daily pivot and then rallied back up through that. So the top may not be in on this. And if we break out above this wave 2, just a bit higher than this wave 2, this larger wave 2, circle 2, I think it's possible at that time that what will end up happening maybe is maybe like a 1, 2, 3, 4, 5, A, B, C kind of here, the same way that we're looking at it here, or even a 1 with an A and a B and a C up here. So wave 2 still in progress is what I would still be looking at if it was a breakout above it. But if we can get down here below 24,795, that's going to be a good first clue that the top's really probably in, and we're headed down here to wave 3 on that. Gold, same kind of idea. Except gold I've got is just a large 1, 2. I got it here as a 1, A, B, C, potentially as a 2, and done. But like silver, had a big drop, hit that previous area of resistance, and rallied back up. So may or may not be done here at the 50% retracement level. If it continues up, you want to look at the 61.8, maybe even the 70.5 here at this supply structure here. But if we can break on down through this 23.6 retracement at about 1931.60, I think that's going to say, hey, we're probably headed down in wave 3 at that point, because you get down below that high volume node there. But definitely a breakdown below wave B here. Support at 1916.20. We'll say, hey, wave 2's done. Wave 3 is in progress. Again, notice wave 3s across stocks, wave 3s across silver and gold, wave 3 with oil. Yeah. So potentially. Petey, have a great day, man. Glad to see you show up. Have a great weekend, as a matter of fact. Andrew, you as well, man. So, yeah. So, I mean, again, guys, I know it's easy to want to be very emotional, but I want to warn you against that as much as possible. And especially if you're emotional and you're finding sound bites that sound really good. Because when you're really emotional, you tend to seek out confirmations. You're looking for confirmation bias. And that's not going to make you money. That's going to lose you money more times than not. Now, that doesn't mean I'm exactly correct here and we're going down wave 3s. But right now, that's what the charts are leaning toward. And that makes a lot of sense, guys. Think about it. The Fed's raising interest rates, right? We've had the fastest interest rate hike cycle since, I think it's also been since 40 years. Just the as much as interest rates have hiked in such a short period of time. We talk about dollar liquidity crisis. So again, many of y'all haven't really delved into what all this repo markets and things mean. These are things I talked about in the newsletter previously, tried to explain to you. And we talk about pristine capital, right? Which are, treasuries, right? And with the Fed wanting to get into quantitative tightening, normalizing their books, that means they're going to be selling off these USTs, right? These US treasuries, these mortgage-backed securities. And so now we're already having dollars kind of, disappearing. And with that going on the market, people are going to be buying that. More dollars going to disappear right back to the Fed. Guess what, guys? It doesn't matter. They printed them. They're back in their hands. They're no longer circulating out here. Remember what I told you, that dollar creation really happens at the bank level, right? And so when you then send dollars back, whether it's to the bank or to the Fed, in terms of paying off debt, or in terms of buying treasuries from the Fed, that takes those dollars out of circulation. Effectively, it's disinflation at the very least, if not deflationary if too much of it's done. When you take your money and you stick it in the bank or under your pillow or something and you don't spend it, you are taking money out of that broader circulation. It's out there, yes, but you ain't using it. So you don't have excessive dollars chasing chasing goods, right? Raising prices. Again, disinflationary or deflationary best. That's why the Fed does this whole tightening thing. That's why they raise interest rates. It's to convince you not to continue to take out credit. Where does credit happen? At the bank level. They don't want more dollars coming out. So you jack up the interest rate so people are disincentivized from taking out loans. Disinflationary. Okay? James says, would they sell or just hold through maturity? You talking about the Fed? No, the Fed has made it clear they want to sell. They're normalizing their books. They want to sell their treasuries and their mortgage-backed securities, or a lot of them that they've purchased over the last 2 years. Yeah, they've made it clear they want to sell them. So yeah. Mike says he respectfully disagrees with my gold analysis. Empirically, I think if indexes fall in wave 3, gold rises, in my opinion. EWI Institute also has gold hitting new all-time high. If it stays above 1950, we shall see. Yeah, sure, there's the possibility, but as I've told you before, if it does break out higher, we're just at wave 4 here. It's not going to go more than a few $100s above the all-time high before it hits wave 5, and then there's a big pullback there as well. Yeah, so even that upside is limited. Because, again, the low that we've had since the previous high, most recent previous high there, at almost 2,100, that dip down is wave 4, would be wave 4 in that scenario. And so wave 5 would just be up. It doesn't have a huge upside to it, even if it was to. But gold has work to do if it's going to do that. Yeah. If it breaks down, like I'm looking to do, to get down below that swing low, that what would be that wave 4, there's little to no hope that gold's going to go up any higher. And actually it looks like it'll head down there toward, potentially below 1,000. So yeah, definitely possible. Sure. It's the same thing I've talked about before. Just not this time, but yeah. If it breaks out above there, that's just wave 5 and it goes up, maybe 2,300, maybe something like that. I think. Let me pull out gold here real quick. Let me pull that back up. Oh, I'm looking at it. All right, guys. Hey, listen. So here's the deal. Let's kind of do this right here. The idea that if this is going to head higher, this is 3, this is 4, and this is 5 heading up, right? So, about 2394, about 2400. I think is about where we'd head up to if that was the case. So not a whole lot further upside if it was to. That said, quite possibly, this is a strong rejection right here. Now, luckily, it found support right here. This previous, I always tell you guys, look left. Found support right here at this previous resistance, but quite possibly could be a double top here. So if we break down below that swing low here, that gives us that $1,200, $1,300 area target based on the double top pattern. And like I said, if we're doing that, then most likely we're probably headed down below 1,000. But, again, still has to play on through it. Let me think here. How best to say this? Let's do this. Let's bring up here, let's compare gold with the Dow Jones, all right? I just got to think, where they move all this stuff? Right over here now. Oops. Let's see here. New price scale. All right. So, You say that if the Dow goes down, that gold should go up, right? Okay. So let's be clear here. This is the Dow. This is gold. The Dow has continued up. Gold has continued up. So I'm not sure that I agree with that. That gold has to work with the market there. Dip here, rallies up, pulls back and then rallies up, pulls back here, you know. We'll see. But overall, you know, in general, you've had them both rallying, right? I think if you had to put something fundamental toward gold, I would say it's inflation maybe. But if inflation has topped out, which I believe it has this last month, or if not, it'll be this month. I believe it's topped out though. Then inflation will, kind of stay high and then drop off. And so, what then reason would have gold? Would gold have to continue higher? Right. So again, for me, it's this big range here. We drop down below the swing low here. That's all she wrote. That my count should be correct, and we're headed lower. We break out above here. The alternate count, which says this is 3, this is 4, and we're heading up in 5, says at the most maybe 2400 area, most likely. But again, all we need to see is 5 waves up above that wave 3 area is the minimum expected for wave 5. There's minimum requirements. So it could stop anywhere prior to that as well. So yeah. But that, again, just looking at it there, definitely not saying it has to go down, but just saying until we're breaking out above this swing high here, we're going to look for it to continue lower. Breaks out above here, then it's likely going to break out there. And again, this is our 3 and this is our 4 and that's our 5. But none of this, it's going from here up to 3 or 5 or 10,000. Again, it's like everybody out there saying oil is going up to $300. Doesn't make a whole lot of sense. But these kind of extreme thoughts are what usually happen at the reversal points, right? This is what I was talking about at the beginning. When the volume wasn't on, that's what I was talking about. I said that markets, as in life, when emotions are extremes, that's usually the end of it. There's usually a reversal from that point. So, again, with markets, that's exceptionally true. That's why, that's why we often see retail buying the tops and selling the bottoms. They're extremes in emotion. They're over exuberant at the top. It can't ever stop. It'll always go up, right? Or down at the bottoms, it's got to go lower. It's got to go. But what have we talked about? I mean, you guys that followed me, I was one of the few people talking about this being the bottom here and the possibility that this was a flat heading up. Now, I didn't guarantee it because there are no guarantees in trading. But I said, as long as we didn't drop below this swing low, we're headed up. We're going to retest the top up here. That's what happened. Everybody else was like, 18,000, 13,000, 12,000. And I talked to you guys about different ways it could go if it was to do that, what it would likely look like. But warned you that as long as we were above here, stop being so emotional about the downside. Everybody's emotional about the downside. Up here, remember this area up here was when we had everybody with the laser eyes photos, remember? Oh, thank God those are no longer around. I don't see them anymore. But remember at that point, and I was a bit frustrated, you guys might have remembered, seeing it all the time and hearing the stupid things like spaghetti arms or fingers and diamond hands, all the nonsense, right? And remember, it was right in here that I said, listen, I said, we are probably at the top. It's not going to be the top, but it's a top probably. And sure enough, it wasn't more than a week or so later that we, started down. But this, I'm not saying this to say, yeah, look how good I am. No. What I'm trying to say is it's the degree of buy-in by the market, the excessive exuberation or excessive depressiveness that comes at the tops and bottoms, which usually mark where those reversals come. And that's what you should be looking for. And so even right now, calls for it to come down, 26, 18 or whatever. And like I said, if we end up breaking down, the same thing I keep telling you guys, we've got to overcome impulsively this weekly pivot, right? If we break down, there's a good chance we're going to dip to the S1 pivot here. But there's a lot of stuff we have to go through in here just to get to this area before we even break down below this area and go. And most likely, if that were to happen, instead of a triangle, we've just got a flat, right? A, B, and then C probably is an ending diagonal here, which is what usually happens with wave Cs most of the time. But for right now, this weekly, look at this right. See this resistance right here? Look at that dashed line. Look at where we hit over here. See exactly where we hit. Right here we found resistance. Split these candles right here. Provided resistance right over here. Provided support right there. Let's see here. Provided resistance on this candle right here off the low. So when you zoom out a bit, you go, oh, well, doggone. I mean, it could go lower, sure, but, I'm not convinced it has to. It's stopped at a good area. So we'll see what happens. We'll see if we get the follow through or we get the follow down. Either way, we know what we're looking for, right? But I don't see things necessarily to the degree they were at that swing high and that particular swing low. Again, when we were over here, everybody was talking about it had to go lower, and I was talking about, no, it's probably the bottom, we're headed up. Again, having to do with the extremes of the emotion that traders in the market were expressing. So here they feel like it's got to go down. And again, I said, yeah, it's quite possible. The count is cleaner with a fifth wave down because otherwise we have to do a truncated fifth here, most likely. I mean, maybe we could go back through here and count this a different way that gets us 5 done here, but I don't think so. I think it would have to be a truncated fifth right here. And with that, this move down is not overly clear. I mean, right here, it just looks like an ABC, right? I mean, this looks more like a 1, 2, 3, 4, 5 than this does a 5 down here, right? And so usually with truncated fifths, they come close to the previous, to wave 3. But also, they're usually a pretty clear 5 wave. You can usually read the 5 waves pretty clear. You can't really hear. If you zoom into 15, you can start finding reasons right here. So, again, that leaves me kind of on the fence at the moment here. And that's why we have our validation and invalidation levels, right? That's why we got those things that we're watching for here. But again, in either case, whether we dip down or we continue up, in either case, I think there's a strong case to be made for this being accumulation down here with where this volume is showing up and the degree to which it's showing up in the sideways price action. Mike Slane says, personally, I find Forex way easier to trade than commodities. Man, I'm with you, man. I'm with you. You guys know I love Forex. It's my bread and butter. That's my thing. It's my jam, right? Yeah, I love Forex. FX is just fantastic. I wouldn't say that metals, commodities are necessarily difficult. I think they become more difficult the more that you listen to everybody's reason why price has to do something or another that's not chart related. I think that makes it a lot more difficult then, because there's a lot of good narratives or things that sound really good, but historically, much like the idea that that the markets move based on news, right? We've debunked that so many times, right? But yet everybody still does it because it sounds good, right? It sounds good when it's said. But I think it's the same way a lot with commodities and stuff like that. There's a lot of reasons that have been around forever and a day, and they seem to make sense. They seem to sound good. But if you look back historically, it doesn't follow through. It's like news events. It's not consistent. And if something has to be the reason why a thing happens, then it has to consistently be the reason why it happens, right? If it is not consistently the reason why it happens, then it's not the reason it happens, right? It just happened to happen. Those of you guys that are statisticians, you know what I'm talking about, right? Real correlation here. Either a thing happens and continues to happen, or it happens once, and in that case, it's just some random thing, right? Once or twice. So, yeah, I think it's a lot of what the issue is when we're trying to trade commodities. But the charts make it a lot easier. They give you a lot more clarity in understanding what may be or may not be going on. Sideways is always something that takes some time. Again, Bitcoin here has been going sideways. I'd love to show you guys this, because because we're looking so close to the day all the time, you don't realize that this range, the bottom of this range, was set back here in January of 21. So we've been going sideways really since then, right? Gold and silver, same thing. Almost, even longer. They've been going sideways, right? In the areas that they're at, right? So gold down here in June of 20. Look at that, June of 20. Or even you could look here at April of 20. That's the swing that produced the support for the range. And we've been just going sideways, guys. Think about that, June of 20. It's over a year and a half. Same thing with silver. So, we'll continue to see what's going to happen here. Again, with gold here, remember what I was talking about with Bitcoin, and locally how we've got the volume is showing up, significantly at the lows, not very much at the tops at all, right? Usually a sign of accumulation. Well, the opposite for distribution. Distribution, your spikes remain all the way throughout. They come at the tops and at the bottoms. Tops, bottoms. Tops, bottoms. Bottoms, tops, top, top, top. No significance of either top or bottom, just strong moves coming up from the tops and bottoms, right? So again, when I look at this on here and on silver, that leans me toward the idea that this may be distribution here going on here, because that volume, if it was to be accumulation, it would look a lot more like, even on the short term, what we see here. This is what it would look like. But instead, again, as I pointed out, the volume spikes are at the tops and bottoms the entire time. Even if we just go from the top here in August of 20, again, a year and a half, and it's not changing. The volume over here is similar to what the volume's been the entire way throughout. This is slightly higher over here at the beginning, but really overall, we haven't really come off significantly from that, right? The small volume here comes down here at the low, right? As you get down here, no real buying going on down here, comparatively, but definitely throughout this range here, selling and buying going on in significant levels. Usually a clue that it's distribution. Not a guarantee, but, again, those are one of the things that we look for as we do it. So, yeah, just different things, looking at these charts and how they play out, kind of determining what may or may not be going on. But, even with all that, guys, it's still important to have, again, your validation and invalidation levels, right? Those are where, with proper risk management, those validation and validation levels are how you make your money or how you protect your account. So make sure you guys are doing it. Listen, I got to get out of here. It's 12:30, guys. Alex, what's up, man? Good to see you checking in. I've got to go, though. I really hope you guys have a great weekend. You appreciate each other and family and, do all those great things. It's, Easter weekend. So again, even if you aren't practicing, I do hope that you have a fantastic weekend and that you're safe out there, both in the markets and of course out in person with all this nonsense going on with COVID and everything else in the world. Do me a favor, do something nice for somebody. Say hi, smile. It's really as simple as that, guys. Hold the door open. It'd be amazing how much you can change somebody, just whatever kind of day they're having, just by doing something kind like that, okay? Hopefully, we'll see you guys in Discord And if you do, please wave and say hi and tag me. I'd love to know you're there and get some conversations going. But even if not, guys, I'll be back on Tuesday, 11 a.m. Central Standard Time. Same YouTube, same Twitch. And we'll see how the market starts off next week. We'll see if we're starting to get some breakdown toward a wave 3 or not. All right, guys. Y'all take care. And I will see you then. Well, if you're Discord, I'll see you here in a minute. If not, I'll see you guys next week. Take care.